to another episode of the daily market analysis, and this is for October 29, Tuesday, 2024, tomorrow. Let's get into the charts. Here we go. So this is the Nifty 50 charts that you see. Yeah, so what's different from yesterday and today? The last trading day and today is that the Bollinger Bands has clearly stopped the expansion on the downside for the time being and then started contracting. But the bias is still bearish. So that's one thing. Another thing is that today's candle, body of that is inside the body of yesterday's candle. That is an inside bar. Inside bars are indicative of consolidation. Banknifty, it had been contracting with respect to the Bollinger Bands since the last trading day itself, and today it contracted even more, so that indicates consolidation or sideways movement. Also, the body of today's candle, which is an inverted hammer, is also completely inside the previous candle's body. That indicates consolidation. So it's double confirmation of inside bar as well as contraction of the Bollinger Bands. So that's in a nutshell of it. Correction so far has been 8.5% on both indices. So it has been red. You see that it has been happening since September 27th, and 8.5% is gone, and we still don't know whether it's a lower high pattern. We still don't know whether it has found the bottom or not. Right? It's a head and shoulder that's still active. Target of that could take it near to the 200 expansion moving average of 23,300 at least. You don't know whether the market has found its bottom or not until it gives a clean close above the moving average is at near 25,000. And that's the same case with Banknifty also. The bias remains a bit bearish, but the volatility could be more skewed still. A contraction or sideways up and down within a narrow range is what could be expected. Bias remains bearish until you see a close above the 51,000, 52,000 in the case of Banknifty. At least that being close above that is required for us to say that okay, the bottom is formed. Until then, it's lower high being made and corrections could extend any time. But as of today, it was a consolidation day for sure. And overall, on a short term, market seems to have paused the expansion of the downside temporarily or permanently, we don't know, but for now, yes. Now if you look at to understand the levels and the supports and the resistances, the first resistance obviously is this zone where you have a confluence of moving average of 20 and 50. There is also a 100 expansion moving average which is still not conquered back yet. So the first immediate resistance would be to have a close above that 24,471, right? So that's very close to the 24,500 levels. It also has a resistance of previous resistance zone. That's also a zone where a breakdown happened from a previous swing lows. Now this next swing low would be 24,74, right? And so once if the 25,500 is cleared, 470 100 expression moving average is cleared, then this zone of 25,000 which has got 20 exponential and 50 exponential and 20 moving average, all of this is coming. So 25,000 is very crucial to clear. Once that is cleared, then we have previous resistance zones which are 25,434 and then window gap 25,740. Those are resistance nodes. On the downside, the supports could come in at the previous swing lows. That's very close to the 24,000. It is a previous swing low, as well as a Fibonacci 50 retracement level also comes in there. So that 23,900 is very crucial support. Before that, you have the 24,000 rounding number also. So that's 24,000, 23,900 is going to be very good support zone. If that is breached, then next one would be the supports of 200 expansion moving average at 23,365. That's Also the previous resistance zone from where the market broke out. So that could be the next crucial support in Nifty. Banknifty similarly, if you see, first resistance would be this zone of 51,700, where you have 51,568 to be precise, where the 20 exponential moving average is there. 21,632 to 51,632. 51,632 is where the 20 exponential moving average is there. 51,666 is where the 50 exponential moving average is there. So that 51,750, that's the zone where it has to clear. So basically, unless you really have a closer of 52,000, just can't think of further more recovery to happen. Once that is clear, it can go smoothly to 52,870, where gap is there, next 53,000, and then 53,350, where you have the neckline of the rounding pattern, cup and handle pattern. That's the resistance on the Banknifty downside. First immediate retested 51,110. Previous swing lows and Fibonacci 50 retracement would be the first thing. So then 51,000, and then 49,500. Nearby you have 200 exponential moving average and Fibonacci 61. So that's a major support zone that comes in at 49,250, then 49,000. So that's where the support in the Banknifty is there. I'll repeat once again. 51,000 is going to be crucial support, and then 49,500 is going to be the next crucial supports. Right? The previous swing lows are coming at 49,650, which is the previous swing low. Then 200 exponential moving averages were very close by 200 points down, 49,650. So that's where the supports are there for the Banknifty. Let's now try to understand what exactly happened in the market. Let's see the momentum first. The momentum for the Nifty and the Banknifty remains to be, in the short term on the Nifty, this remains to be the bear zones. Banknifty is still not falling to the bull zones. It is just at the support RSI 40. That the Banknifty is more strong. But today it seems to have taken a support of the RSI 40 momentum and then bounced up, which is very positive. Similarly, we are wait for this momentum to climb back with the RSI above 40. But it's still, as if now, it remains the bear zone itself. But there is improvement in the momentum, we can say. Right? As far as trend is there, it remains to be bearish on both time frames. But bearishness may be reducing a little bit, that's all. So the trend remains negative. Momentum trying to climb back on the sideways in the case of Nifty. And Banknifty trying to climb up by taking support at the RSI 40 is what is happening. Otherwise, if you see today, the different sectoral indices, if you see, all of them are close green. Right, he is at the top, least corrected. Metal has climbed back in the sideways with a 2.5%. Auto has also given some bounce up, remains with the bear zones as far as in the short term. Pharma also bounced up and climbed back with the sideways momentum. FMCG did show green, but remains in the bear zones in the short term with respect to the momentum. Reality also remains by bearish, but it is close to 1.3% up, bounced. So overall, a green day for all the sectors, but you have only the IT and metal and pharma, which is in the sideways, auto, FMCG, and reality. So half of these major sectors remains to be in the bear zone. Short term, it has to climb back in the sideways. Can at least confirm that the sectoral recovery has happened. With respect to the heavyweight stocks that contribute maximum to indices, HDFC did not do well today. In a red day, 0.5% gone. Reliance has some bonus additions. Data is not correct, but overall it was flattish close. Axis Bank had a result good and gap up and good close of 3%, the best performer of the day. IT stocks did well, and Kodak Bank, it is just consolidating as usual, and so 1% down today. ITCS showing some green and trying almost climb back in the sideways from the bear zones, you can see. Right. So Reliance and Kodak Bank, and actually Reliance has not climbed. Is still not in a great shape. So the major support zone, we are not seeing the bounce back in the sideways in this particular moment. So today is a mixed bag. Not too much of red if we take the different heavyweight stocks. Now the volatility India VIX has been flat, just 2.5% cool off. Still remains 14.5. India VIX is not in low volatility. It's very close to the medium volatility, you can say. So the fear factor is still there, although some cool off has happened today. And support resistance we have seen. Often this may not be relevant because we have one more date for the expiry to come. So after tomorrow is the Banknifty expiry. We'll study then. The PCR for both remains to be the bearish and not above 1. So that way YI is negative. Futures build up as positive today. Both of them are a long build up. The AFIs has been selling since 3 weeks or more. The entire October they have sold. October is 90,000 crores of selling. Consecutive selling for almost 20 days or more. That's what is happening. But the domestic institutional money is flying into the mutual funds and then holding the market. And that's the same thing that might have happened today as well. Right, you can see that sell-off on the FI side net. There's not even a single day where they have been buying. US markets are showing some red the last Friday when they closed in Dow Jones and S&P 500, especially in Nasdaq is kind of showing a gravestone, which is bearish and decisiveness that you see. Try to be slightly cautious, but remember, despite all the pro-global cues with regard to the Middle East crisis and US elections, volatility and all that, US market still is not too far from the all-time highs. Keep that in mind. To sum it up, market is consolidating, back to consolidation. You don't know whether that's a temporary skews or it's a skews towards an expansion on the upside and the rally continues. You don't know that, but it's a pure consolidation with respect to the bands and the candlesticks for sure. Fundamental reasons are listed down here. All this we have been talking about the charts of technical reasons. So you have to stay cautious. Bias is still bearish. Market tend to consolidate is what market view is on. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.